Okay, now we are moving on to the 30th chapter, credit delivery. Okay, credit delivery starts after project appraisal or any term loan appraisal or any kind of loan appraisal. Okay, for appraisal, banker or lender starts to identify promoter or any kind of borrower whether they are going to deliver the loan or not. Okay, after appraisal, the next followed by delivery is the indication. After the moment the delivery of the loan transferred in the hands of the customer, that is borrower here, then the day one starts for realization. Yes, the borrower may get the chance of loan. Until unless if delivery is not taking place, the borrower could not realizing his kind of business operations. So that for giving loans, any kind of lender or simply we are talking about the banker, any kind of banker making realizing the borrower to be realized in the real world whether the loan is to be disbursed or not only starts after the moment the delivery taken place. Here any banker delivery for any banker delivery is the most critical aspect because from day one starts here for considering of the interest or principal amount of payment or EMIs whatever. Okay, here in this chapter for better understanding the credit delivery, these are the topics to be covered. So in this chapter these are the objectives or the coverage of these topics. The first topic is for credit delivery, the banker as well as customer, that is borrower, going to agree together for documentation. So the first step is documentation. Documentation is the only evidence for credit delivery. Unless until documentation to be not to be prepared, credit delivery is stopaged. So documentation. Then documentation is only because of the guarantees. Okay, so what are the requirements for the guarantees and what is the guarantees to be also we discussed here. And some exceptional cases, guarantees is not enough for documentation to deliver the credit, so that the banker or the financial lenders going for third party guarantees also. So third party guarantees also we are going to discuss in this chapter. Then methods of charge over securities. What are the charges to be applied over the securities? What are the methods involving in this, and also methods of delivery of bank loans. What kind of methods the banks are going to adopt for delivery of the loans, and also multiple banking and also syndication of the loan also we are going to discuss in case of credit delivery. Okay, so appraisal is the one kind of important issue before the delivery. After appraisal, delivery is the another important issue in the credit system. Okay, these are the topics to be we go ahead. Okay, and now we go for first introduction in the credit delivery system. In the credit delivery system, these are the points to be noted down to be particularly carefully observed by any kind of lender, particularly banker, before going to appraisal or after appraisal before credit delivery. The first point here is safety of the credit considered properly or not, because after credit delivery the banker has no chance to control the credit because everything is finished. So if it is not considered properly, the risk is high. If it is considered properly, the risk is low. So in case of risk management, credit delivery is the ultimate step for assessing a project or any kind of loan appraisal, so that the safety of the loan or safety of the credit considered properly or not to be considered first before the credit delivery. Then second one here is, while granting a loan to any borrower in case of credit appraisal, very critical. So for credit appraisal, most of the times banks only taking the initiation. Sometimes the banks are approached to outside agencies. So based upon the critical appraisal of the term loan, based upon the critical appraisal of the project, or based upon the critical appraisal of the condition or position of the borrower, only they are going for credit delivery unless the delivery is stopped. Then third one, for credit delivery, what documents to be obtained from the borrower? For obtaining maximum credit security, for obtaining maximum credit low risk, what are the documents to be needed from the borrower to be well defined. whether any charge is to be created on primary or collateral securities. Primary securities means nothing but equity securities, whereas collateral means any other securities. On these issues, whether any charge is to be created or not, finally before going to delivery we just observed. Then charge of the bank in case of any risk situation, in case of bank is going to charge any kind of issues over the securities, whether it is registered or not, because the future law is whatever the case we should be registered if it is in the law premises only. So that is future in consideration. In case of future implications, we just registered in the hands of the law, should be observed. Whether security should be positioned by sometimes borrower, sometimes banker. Under what circumstances the borrower is going to position of the assets, under what circumstances the banker is position of the assets to be considered. So the whether security should be positioned by the banker or by the borrower should be observed. And finally, what are the RBI guidelines? So these guidelines to be implementing properly in the hands of the banks or any kind of lenders. So if once these points to be very carefully observed, then only the bank is going for delivery. So after delivery, the borrower is going to realizing the loan is appraised. Okay. Now we go for documentation. We just go for explanation of about documentation. In the documentation, there are the prerequisites to be observed carefully. First, the stamp duties. Okay, any kind of document or any kind of property going to be documentation, it should be stamped properly by concerned authorities. Okay, date before stamping only. Here that means the date means here the agreement date. Before going to stamp duties, the date should be mentioned. The agreement should be properly drafting. After completion of date indication, after completion of drafting only, we go for stamp duties. We go for stamping. Then free will should be observed. Free will means here both parties are involved in, lender as well as borrower. So the agreement between these two parties signed or stamping with expression of the free will of both the parties. Okay, any kind of force should not be expressed through the documentations while the stamping. Then documents are filled before signed. That means the signature considered by both the parties after completion of documentation. That means stamp duties also. Okay, before signing, everything is finished. Everything is filled properly as per the requirements of the sub-registrar office or any kind of registrar. Sign on behalf of firm. Okay, here the parties to be observed or signed on behalf of firm, because the firm is considered as an artificial person, but not on behalf of personal. On behalf of personal, the guarantee may or may not be suits according to the requirements of the agreement of credit delivery, but whereas the firm requirements may be completely suits. So registration, if any, in case of any registration, before 30 days of execution of the documents, if documents are prepared properly, stamp duties are payment properly, after completion of the document preparation, if it is valid up to the 30 days for registration. Okay, within 30 days we go for the registration. Otherwise, if the parties may not go for agreed registration, the documents are not valid, so that we go for fresh agreement. Then finally, any document is going to be registered with sub-registrar within the time limit only to be registered, unless until if time is expressed, if time is beyond the time limit, the document is not valid. So they are the prerequisites. Any documentation office properly observing these kinds of situations. So it is the mandatory of any bank, it is the minimum responsibility of any lender before delivery. So if these are very confident enough, then credit delivery is taken place. Okay, documentation is over so far. Now we go for third party guarantee. Okay, before credit delivery, after appraisal, after documentation, the bank is looking for third party guarantee if in case of any default risk. Okay, before going to third party guarantee, let us see the first point here. Who has taken loan from the bank? That means borrower. Who means here the borrower. whoever the borrower taken loan from the bank, they are only liable to pay the principal as well as interest. For example, if I am the business person, if I am the borrower taken from loan from any bank, I am responsible to pay total my principal along with interest. Okay, this is the first point. Then, in case of additional security, if my security is not up to the mark in the eyes of the bank, in the eyes of the loan provider, then the bank is going for stipulates third party guarantee. Okay, then third party involves if I am not suitable, if I am not responsible, if bank is not reasonably consider my guarantee is the sufficient, then they go for third party guarantees. Now we go for what is third party. Third party guarantee is a person or a firm or simply an agent against borrower default risk. If borrower means myself is not capable for payment of principal along with the interest, on behalf of myself, the bank is administer another person for a guarantee who is a third person, another firm who is a third person, another agent who is a third person for particularly myself if I am the defaulter. Then here third party securities personal guarantees are there and also good management also there. If personal guarantee is unlimited liability as well as limited liability. For example, most of the cases banks are first giving preference to the firm. Okay, the firm is more responsible, it has many assets, it has many promoters, so that the reason instead of person, instead of agent, the firm requirements are more suitable for the third party guarantees. For example, if firm has limited company, every promoter has unlimited if firm is a private organization, if firm is a private limited company, every promoter has unlimited liability. Since it is an unlimited liability, the amount of loan is more and more, the security is low and low. So that the reason the person guarantee is differentiated from limited. If it is a public limited company or any joint stock company, any big organization, any statutory body, every promoter or every person or every stakeholder has limited responsibility, limited liability. Okay, from here the whole amount liable from the third party, here the whole amount could not be liable from the third party. So the third party differentiation guarantee is exercising from here. And also the next category is good management. Before loan delivery, before credit delivery, appraisal is good because the promoters have good credibility. But in case of the term tenure, if management promoters, the directors of the company or the promoters of the company changes the management, then the liability is question mark. The new party is acceptable the earlier liability, or the earlier persons accepts or to be continued the same liability even the management changes. So they are the questions to be arising in case of third party guarantee. So that if third party guarantee is looking by a bank, they completely come to a conclusion whether funds is risky or not, whether funds are safety or not. If risk is more, third party guarantee a little bit stronger. If risk is low, they should not go for third party. Even they go for third party, not that much of consideration. Okay, third party is a third person who bears the borrower's default risk. That's it. Okay, hope you could understand. Okay, next we go for charge against securities, charge over securities. Here, according to feasibility and flexibility of the banker, that means lender, different types of charges are applying. Okay, all these charges are simultaneously contemporary using, but based upon the asset classification. Sometimes fixed assets, sometimes other current assets, sometimes fixed assets like movable or immovable, like tangible or intangible. Different types of assets going to be pledged against the securities. So because of the proper security only, the credit will be delivered. So most of the cases we go for mortgages, sometimes we go for the pledges, in some exceptional cases we go for hypothecation, lien, and also assignments also considered. There are the different methods or different charges of securities against whether the banker going to credit delivery to the borrower or not. Okay, simply these are the topics we just cover in the further chapters also. Okay. Next we are going to discuss positional security. Positional security is completely discussed after the earlier topic which we discussed, like mortgages or any charges of against the security. Okay, in case of mortgages, in case of pledge, in case of hypothecation, any kind of security discusses the position of a owner. Okay, here sometimes in case of mortgage or any kind of pledge, the asset or assets locked at the banker, that means money lender. Sometimes the asset enjoyed with the borrower only. If the asset in the hands of the banker, that is considered as lock and key advance possession. That means, for example, best example, stock. Against the stock, if you are going to take out any loan from the banker, there the bank person come and close the godown lock and keep the keys in the hands of the agent. Whenever we requested some certain amount of stock, we just pay to the banker. On behalf of banker, we just pay the agent and we take out the certain stock. That means the amount of stock within the holding of the banker, because the stock itself here is the pledge, the stock itself here is the mortgage. But whereas if the asset is enjoying with the borrower, against that asset if you are taking any loan, that loan is constructive position. Okay, either it is lock and key position, either it is constructive position. Why the position of charge we need to discuss here is the future in case of default imperfectness of the legal system. In case of future default condition, if the borrower could not pay the sufficient principal along with the interest, then legal system may or may not be protected completely to the lender. So the legal system itself imperfect in nature, particularly India like democratic system, the kind of position entertained by the borrower. Earlier, up to the 90s, up to the 80s, every bank follows the lock and key advance system of the position. It is inconvenient for both banker as well as borrower, because the separate persons to be employed here, the charges are very high. In case of requirement of the continuous requirement of the borrower, go and approaching the bank, go and approaching the agent is a difficult task. So that the reason gradually from the 90s, from the 2000 itself, the lock and key advance system completely closed by the banks and coming to the picture of constructive position. Here the asset is enjoyed by the borrower, but banker have a keen observe of the borrower along with the assets. So these are the two kinds of position with respect of the pledging situations, the mortgage situations. Okay, hope you could understand. Okay, now we are going to discuss disbursal of loans. Okay, in case of credit delivery, the final step is disbursement. Okay, the disbursement itself considered as credit delivery. Here the disbursement happens with two considerations. The first one is working capital loans, the second one is term loans. Okay, these two delivery before a proper appraisal. Okay, appraisal is mandatory. Here for working capital loans, we have 2 points we should consider. The first one is, if working capital requirement is 10 crores or more than the 10 crores, the loan component normally 80% of the project proposal, project appraisal. Whereas if the borrower having a chance of working capital loan less than the 10 crore, then the banker or lender offering incentives in the form of like lower interest rates. Okay, if less than 10 crore means the borrower, the lender have more capability to providing working capital loans for more borrowers. So in case of providing loan more borrowers means the diversified borrowers entering into the bank system, which reduces the risk. Only the maximum amount providing only 1%, the risk is high, everything is risky. If lesser amount disbursing number of persons, if one person may be risky person, the risk is reduced with the proper genuine person. So that the reason lesser amount working capital requirements, the banker offers incentives like lower incentive, lower rates of interest. So these are two proposals coming for working capital requirements of any kinds of loans. Then coming to term loans, term is approximately 1 year, certain exception cases 2 to 3 years, most probably for fixed asset requirements, exceptional cases working capital also to be considered. Okay, for 3 points to be considered, every point only because of the promoter's initiation. First consideration is promoters bring their entire contribution upfront, whatever the proportion, whatever the amount there come from, the contribution to be contributed first, then the bank is going to disbursement. For example, the total amount of expenditure is 100 crores, out of 100 crores 50 from equity holders, 50 from bank holders. So in the first case, the first 50 from the equity holders bringing upfront, then only the bank is releasing remaining 50%, the first case. The second case, promoters bring certain percentage only, for example 10% or 20% or 25% or 30%, the percent where the agreed together, the contract agreement, the promoters bring certain percentage of equity like 40 to 50%, and balance is on stage wise after completion of a 3 months of duration or certain manufacturing or certain goods supply, like that the stage wise they are going to releasing, then only the bank is releasing next. Whereas the third consideration which we have is promoters agree to bring proportionately as the bank proportionate disbursement. For example, bank is going to release 10%, equity holders also contributing 10%. If bank is next releasing another 20%, then equity holders also coming to contributing 20%. Like that, the proportionately the borrower lender came forward. Here, based upon the existing percentages only, the first equity percentage to be contributed. Here, the first maximum portion of the equity holders contributed, then only the bank is disbursing. They are the different ways of disbursal of loans. All these credit delivery systems only for proper utilization of funds. So the carefully credit delivery system is exercising from the Indian banking system. Okay, then we go for the last topic. Okay, next we go for consortium lending or multiple banking lending arrangements. Okay, here the topic is lending under consortium or multiple banking arrangements. So consortium or multiple banking only for two reasons. The first reason is if working capital limit is beyond the bank policies limit, or the working capital limit is, in case of bank eyes, it is risky, then bank voluntarily involves another bank for providing credit delivery or the working capital loans. The first condition is against the policy of the bank releasing loans, or the amount is very risky in the eyes of the first banker, the banker voluntarily involves another bank. This is the first case. The second case is borrower, most of the times borrowers also not depend on single bank for all the working capital requirements. If more banks are, sometimes the appraisal may be different. One person may be taking 1 month for appraisal, another bank may be taking 2 months for appraisal. One person may be appraised is very critically appraised, another person may be liberalized appraised. So that the reason in the second consideration, borrower themselves not depending on single bank for credit delivery, so that borrowers themselves approaching two banks. Whereas the first consideration is the amount of loan is risky in the eyes of the bank, or else which is beyond the bank policy limits, another bank is involved. So either case, the lead here, what we observed here is the lead bank is taking the leading role, like critical requirements like documentation, appraisal, monitoring, recovery of the amounts, principal along with the interest, everything, lead bank take the role. Okay, these two cases only we go for consortium. Consortium means involvement of more banks for credit delivery. That's it. In the multiple banking or consortium also, there are certain rules provided by RBI. These are the RBI guidelines. Okay, first guideline here is banks obtain declaration at the time of granting. Okay, the lead bank should take the should obtain the declaration from the borrower every time at the time of the granting. Okay, then second point here is the banks also exchange of information in case of any necessary about the borrower accounts, because borrower accounts maintained by all the consortium banks. So if one bank is going to consult another bank, there may be possibility of exchange of information. So for that also they are taking the declaration at the time of granting. Then third one is obtain regular certifications by professionals like company secretaries, like chartered accountants, because the banks are far away from the operations of the borrower, so that whether the company is going to increasing the asset value or decreasing the asset value should be not aware that much of in case of banks. So that the reason always these banks are requiring for certifications like professional bodies. Then fourth one is make greater use of credit reports available from credit information companies. There are certain credit information companies are there, from them make greater use of credit reports available. So this is also a guideline set by the RBI. Then finally participative lenders, that means the multiple bankers, all bankers are here participators. So participative lenders should evolve procedure to complete appraisal of the proposals in time. For example, the borrowers are expressing their views regarding payment of principal as well as interest. So based upon the expression statements of the borrowers, bankers also along with all the participants evolve themselves whether the borrower is giving statement properly or not. So these are the precautionary steps before any default risk happen in case of future, so that the consortium will make fruitful results to the any bank. Thank you. Okay, next, syndication of loan. Here syndication means clubbing together. In case of consortium also we talking the same concept, like one bank with consolidated with another bank to providing loan for any borrower. Like that here also as many as possible maximum banks clubbed together for giving any kind of loan assistance to the borrower. Okay, here sharing of long term loan to a borrower by two or more banks comes under the category of syndication. For example, if it is a public limited company, the huge amount of loan is requirement. So such kind of loan not a possible issue for one bank or two banks. So in such a situation, based upon the maximum credibility of the promoter, the maximum credibility of the brand image of the company, the sharing of long term loan by n number of bankers. So that comes under syndication. Here in the syndication also we should observe certain characteristics. The first characteristic of why most of the banks come to approaching syndication is risk is sharing first. The risk is shared by all the banks. Then association with other lender, like if it is a bank, association with the bank, if it is a financial institution, association with the financial, so that among the bankers or between the banking to financial institution or among the financial institution there is a possible of good relation because of the outside parties of borrowers. So this is the second important consideration. Then third one is lead bank takes responsibility for all issues. For that kind of responsibility, lead bank charges also as syndication fee. There is a amount of fee collection from the borrowers as the syndication fee, because it is observable all kinds of responsibilities, and also the banks as well as financial institutions benefited with each other association, and also risk is minimized. So these are the different characteristics we just observing with the help of the syndication. So this is syndication loan. Okay, hope you could understood.